Okay, welcome everyone. Thanks for taking some time out of your day today to listen to Carley and I talk about automated and algorithmic trading. Uh, what you see on the screen, Carley's on the left and I'm on the right, and we're opposing fans of two major sports teams, the Bulls and the Cavs in basketball, which that was the first time we met. She came to Cleveland to actually see a Bulls game. I think the Bulls lost that day, but and of course I'm a happy Cavaliers fan because I was at the championship ceremony last night, so that was pretty cool. And then of course the Cubs and Indians, the two teams that have gone the longest without winning a World Series this year, one of them's going to do it. So we need to have a friendly wager on that, Carley, somehow, but because one of us is going to win, right?
Yeah, that's kind of right, zero-sum game. I did notice, though, you left off the Cleveland Browns and the Chicago Bears.
Yeah, probably with good
For
reason.
Good reason. Yeah, exactly.
It's hard to be a Browns fan, and it's probably not much easier being a Bears fan these days. So.
No, definitely not.
But anyways, Carley's going to be talking probably about 20 minutes or so, and I'm going to start everybody off with some of the things I have to say, and then at the very end we'll have questions and answers, probably about 10 or 15 minutes, hopefully, from both of us. All right, so let's get started. I'm going to talk about my part first, which are just the basics of automated and algorithmic trading. And again, one of the co-hosts with me today is Carley Trading. So they're great. Obviously, you've probably heard Carley before, and if you haven't, she's a great broker. She is one of my brokers right now, and so I do trading with her. So, you know, whenever I do these kind of joint webinars, I always like to make sure that the people I'm talking with that I actually have a lot of respect for and that I actually use. And Carley certainly fits the bill for both of those. So if you're looking to open a trading account, definitely give her brokerage an opportunity because I think you'll like it. So first, for those of you who don't know me, I'll go over who I am, and then we'll talk about some of the basics of algorithmic automated trading, and then, like I said, I'll turn it over to Carley. All right, so here's our favorite U.S. government disclaimer. A lot of good stuff here. That's what I tell everybody, and you know, most people just look at it and they're like, yeah, I've seen that before. But actually, when you bring it down to individual sentences and statements, there's a lot of stuff that can save you a lot of money if you follow it. You know, things like past performance is not indicative of future results, and treat all results as hypothetical. Great stuff. So make sure every time you see that, you really think about that and what it means to your trading. Okay, so who am I? I'm a full-time trader. That's primarily what I do. But then I had some time, and so a couple of years ago I decided to write a book, which turned out to be more of a, not really a financial thing. It was more of a labor of love type thing. I'm sure it's Carl, because she's written a bunch of books. It's a lonely existence, writing a book. And I also do part-time consulting and teaching for traders and some CTAs and those kind of people. Been trading about 25 years. Last 8 plus have been full-time, so I was able to make that leap that everybody always talks about of, hey, I want to be a full-time trader, you know, and I was able to make that leap from part-time trader to full-time. And you may have heard of this contest, the World Cup of Futures Trading Championship, and 3 years straight I was able to get over 100% annual return, and that's a year-long real money contest, and I finished in first or second place each of those 3 years, with the middle year being 100%. I am the author of Building Winning Algorithmic Trading Systems, which won Trader Planet's 2014 Book of the Year. And it's got a lot more than just how I build trading systems. It's also got the story of my journey as a trader, which I think's kind of interesting because it involves a lot of down periods, a lot of losses, a lot of bad stuff, but I try to make it balanced. Trading's not all sunshine and happiness. There's a lot of gloomy times, and certainly I describe that in the book. And you see some quotes on the right there from people I really respect. Van Tharp, who was a market wizard. I follow a lot of his teachings out there, and some of his home courses that I've taken over the years. So if you're interested in this type of trading, it might be worth taking a look at this book. I also created what I call a strategy factory, and that's the course I teach. And I'm not going to talk a whole lot about that today because that's not why you came here, but if you're looking for a way to standardize the way you're developing strategies, if the way you develop strategies is some you test a bunch, others you don't test at all, and if you see one in a magazine, you just grab it and start trading it, my course might be able to help you because I break it down into a step-by-step process where every step it either passes or fails. And you throw away the strategies that fail, and then you keep working on the ones that pass. And hopefully in the end, you have a bunch of strategies that you can kind of rely on and then trade as a portfolio. And that's the whole factory concept, is you don't want to just build one strategy, you want to build a bunch of strategies. All right, so today in my portion, I'm going to talk about the basics of algorithmic and automated trading. We'll talk about some of the advantages for all of us as retail traders, because that's probably what most of you are, and that's what I consider myself as even though I do it full time. And then we'll talk about who should consider it, because this isn't for everybody. And then finally we'll talk about how to get started and how to actually learn more. So, the big thing, people hear the word algo, and a lot of people just freak out. They're algo, and they get scared because they start thinking of like high frequency trading firms and all that kind of stuff. The way I look at it, I just stay away from that. I stay away from the high frequency world because I know I can't compete there, and I don't try to, and neither should you. Just go a different path. Just don't listen to people that say, hey, algorithmic trading means high frequency trading, because it doesn't. And you just can never compete with them. So it's not even worth trying. So I'm not the kind of person to scalp for pennies, and make 10 trades a day or 100 trades a day. And frankly, if you're looking at it too with most retail platforms, it's not going to work. Unless you have millions of dollars put behind it, I wouldn't even try. But when you say the word algo, it's really just another way of saying terms you've heard before. Mechanical trading, systematic trading, rule-based trading. Because all an algorithm is, it's just a bunch of rules, right? It just says, if this happens, buy. If this happens, sell. That's what an algo does. And that's all we're talking about here. It's just rules that tell you when to trade. And then the nice thing about these algos is once you program them, you can automate them. And that's where the big benefit comes about, because you can automate a lot of different markets. Think about the trader, and I'm sure you've seen it, the person with like 8 screens, 8 trading monitors, all different markets, and he, frantically going from one to the other looking for opportunities and that kind of thing. That's pretty high stress. I can't even imagine doing that. But if you go this route, you program the strategies, you let them run automated, and you can trade 20, 30, as many markets as you want. Right now I trade about 95 different strategies, and about 2/3 of them are actually automated, and they just run. Sometimes like today I think they were losing money, but hopefully more days they're making money. But you just let them run. And what's cool about it, for one, you can test the rules yourself. You can determine for yourself that things are going to work. You don't have to rely on somebody out there selling something, some magic indicator or some magic system with this great looking equity curve. You rely on yourself. And the key is obviously you learn how to do it the right way. You'll start to believe in yourself. You'll start to trade and hopefully show profit. And when you do, then it's kind of this self-fulfilling thing where, oh, okay, I know I can do this, and then you'll start doing it. And you'll get better and better. It's pretty neat. And that's what you're going to want to do, because the second point, you're going to want to create many strategies, and you get that diversification. I mean, anything that's the holy grail out there, diversification is probably the closest thing I've ever seen. And that's what you want. You want to get diversified. And the final point, you don't have to be glued to a screen. You can check in once in a while, make sure your automated systems are working. I was talking to somebody earlier today about what my trading day is like. And most of the time, if I'm not working with some students, I'm developing systems, and once in a while I'm checking the ones that are running. But I'm doing a lot of R&D work, research and development. That's a lot of my time. But I'm not glued to a screen where I can't go up to go to the bathroom because I'm worried that the market's going to move. I just let the strategies do the work. And this is why, I keep saying diversification is the key. I think this is about 10, it's about 10 different strategies. Now, I could show you the equity curves of each of them, and none of them look that great. They all have ups and downs. But when you put them together, they look pretty good as a portfolio. And that's the big benefit of trading a lot of strategies. The way I put it, profits add. If you trade strategy 1 plus 2 plus 3, you're going to get the sum of the profits, right? But the drawdowns don't, because the drawdowns happen at different points in time. And one strategy is making a new high while another's in a drawdown. They kind of balance each other out, and you actually get a smoother equity curve. So that's the real benefit to trading a lot of strategies. But obviously there's disadvantages, right? If you don't know what you're doing when you develop a strategy and you just, start it up and start the optimizer and start doing stuff, you're going to make bad strategies. And that, you can make 10 bad strategies. That's not going to help you. And people rely too much. Remember that disclaimer. Past performance is no guarantee of future results. Some people trust that backtest too much. And you got to realize that that backtest might not work going forward. A lot of people just tweak their strategy. I can tell you story after story of people who get a strategy and then look at all the trades and then filter out the bad trades or the trades on a Tuesday or whatever, and they tweak it and they get better and better backtests, but it doesn't work going forward. And then a lot of people think this is just set and forget. And if you think that and you want that, this isn't for you, because you have rollovers, you have internet problems, you have all sorts of data corrections and all sorts of things. You do have to keep an eye on this, and so if you can't, it's probably not the way to go. And that's really the bottom line. I mean, this isn't for everybody, and depending on the kind of person you are and the way you think, you might actually be better off trying discretionary trading. So people ask me, well, who are the people who might be good for this? More of the math and science type people. analytical thinkers. If you're kind of like an artsy kind of feeling person, this probably won't work as well for you, because this is all about a testing process, looking at numbers and making evaluations. And it's cut and dry. It's a trade or it isn't. It isn't one of those things, well, oh, I wouldn't have taken that trade because, the RSI is down today. You can start to see it sloping down. It's either yes or no. So there's no real gray area with pure algorithmic trading. So that's the kind of person, an analytical type person is the one who would be better off with this. So you should ask yourself, can you follow rules exactly all the time? In the beginning, most people can't. But if you understand why you should, that's probably good enough. Can you develop a strategy properly? Do you know the right steps to take? Do you know how to avoid curve fitting and overfitting? And how complicated should your strategy be? Do you know those things? If you do, hey, then go for it. Are you a tinkerer? Do you always want to improve your strategy? If you do, you're going to find a lot of trouble, because you're always going to be chasing performance. And trust me, I used to do that, where I'd create a strategy and then, oh yeah, it had bad trade today, so I'm going to make a rule change or filter to filter those kind of trades out, that kind of thing. If you constantly tinker, you're not going to be good. And the last one's really important. You've got to be excited about doing this. I wake up, I develop strategies. I go to sleep at night thinking about strategies I'm going to wake up and develop the next day. I'm constantly wanting to develop new strategies, but it's frustrating. I can go a month or more without developing anything new, and then all of a sudden I'll develop a bunch of strategies. So it's kind of funny. I was just emailing right before this webinar somebody who's on the call, Francisco, who was a student a while back, and he was telling me he just out of the blue came up with 2 strategies in the past couple days, and he had gone a little while before that with nothing. So that's what kind of happens. You get frustrated. So and somebody mentions patience. You got to have patience to do this, and you got to not be flustered easily or frustrated easily. It's kind of tough. Okay, so how do you start? You get a broker and software. One solution is, if you were going to go with Carley, you could use multi-charts with her. You could do easy language. That's great. The way I use Carley is I actually use TradeStation and send some signals through NinjaTrader, and then it goes on to her as a broker. That's another option. So there's a couple different ways you can go, especially if you want to go with Carley. The next thing is to learn the software, obviously. You've got to learn how to program in it. You've got to learn how it works. There's plenty of stuff out there for that. Then you have to develop a strategy correctly. And if all your strategies look like this in backtest, and then you go with real money here, and it starts doing this, you're not developing right. So you got to think about how you can change that. And it's not easy. It takes time to learn how to the right way, because there's a lot of wrong ways to do it. Okay, so how do you actually do that? Here's a quick example. You load up a chart. This is with crude oil, and this is a back-adjusted continuous futures contract. And if you don't know what that means, just write that down right now, and hey, I got to Google that. Here's a simple system, and believe it or not, this is actually a system I trade. What you don't see are some of the walk forward code part of it, so I might be varying the number of days back here with time, but it's got a simple, if it's a momentum open or a momentum buy, and if the the momentum's down, you sell short. You set a profit target, a stop loss. That's it. Pretty easy. And you can see it looks really good from the short side, not so good from the long side, but you know what? If you're trading this as part of a portfolio, it's pretty good. And then you can just take it live. That's pretty simple. You just check a couple boxes. This is TradeStation, but you can do the same thing, I'm sure, in multi-charts. Just check a couple boxes, and there you go. But obviously, just in the interest of time, I left out a lot of details. What's good? Should you use walk-forward testing? What if it stops working? I mean, there's a lot of things to start. When you start out, you don't even know you don't know them. It's those unknown unknowns. But at least that gives you an idea. It doesn't have to be a 20,000 line computer code program. You can get away with very simple little systems, and those tend to work the best going forward. And a lot of people don't believe that, but I'm absolutely convinced of it, having done this long enough. The simpler systems work better. The problem is they look worse in backtest. I can add 10 rules and get a great looking equity curve, but that doesn't really help you. I'll tell you what not to do. Don't call up a chart, insert a strategy, optimize it with all kinds of rules, and then take the optimum results and immediately go to trading. Nothing else. That's the wrong way to do it. But that's what most people do. It's really, it's kind of sad, really, but that's what the software really encourages. They make it easy to optimize and look at the results, but that's not what you want to do. So if you want to do it right, and you want to do this algorithmic automated trading, some hints. You can read my book. I think I lay out my process, and obviously my workshop also lays it out in much more detail, and then I work with you personally. That's the benefit of that. But there's also other good books out there. Robert Pardo, he wrote the Bible on system trading. Get that. There's another book by Tomasini. And then you can actually look at what all three of us do, for example, and kind of blend it into your own process. Ultimately, at the end of the day, what process is right? Well, it's the process that works for you. It makes you money and makes you trade well. And it can be different than what I do. That's fine, but eventually you've got to prove it. And that's the big challenge. So, wrapping up my part, it looks easy. And just what I went through certainly makes it seem simple, but it's very hard to do correctly. Very hard to create a system. If you started doing this and you came up with one system a month, you would be doing great, in my opinion. But think about it. A year from now, you could have 10 or 12 systems you could be trading. And that's the beauty of it. You trade those together, and you get a lot of benefit. Okay, so if you're going to start doing this, Carley will have a lot more information. But, research platforms and brokers, read these books, get help, come up with how you want to do things, and then start developing. And once you start developing, you just continue it. And that's why I call what I do a factory. It's just, you just keep pushing parts and making parts. And the ones that are bad, the strategies that are bad, you throw away. And that's pretty much it. So for any of this, if you have questions, email me, Davey at kjtradingsystems.com. I'd love to talk to you. And with that, I'll turn it over to Carley. I'll make her the presenter, and then we'll listen to all the good stuff she has to say, and then afterwards we'll have time for questions. All right, thanks.
I appreciate Kevin inviting us to do this joint event with him. It's a lot of fun because Kevin's been a client of ours for, I think, around 3 years, I want to say. I consider him a friend. I have met him, and obviously I respect him. He did mention his book, which is Building Winning Algorithmic Trading Systems. I have read it. In fact, I actually endorsed it. It's on the back cover, and I loved it. So if you're interested in this sort of thing, it's a great book. All right, we're going to talk about more of like the big picture of system trading. Kevin's the expert on chatting the details, but we'll give you the big picture. If you don't know who I am, my name is Carley Garner. I am a broker at Carley Trading. We're located in Las Vegas, Nevada. This class is a lot of fun for us because we normally focus on option trading. That's kind of our forte, so to speak. So this gives us a chance to expose our followers to something a little different, some new ideas. So we're really excited about that. As Kevin mentioned, I'm a broker. If you have any questions about anything that we talk about today, or you want to learn more about us or about some of the other things that we do, you can visit our website. It's decarleytrading.com. And if you're on social media, at Carley Garner is my Twitter handle. We're also on Facebook and Instagram. Along with being a broker, I am also a couple of other things. I wear a few hats. I do write a monthly column in Stocks and Commodities magazine. You might have seen some of my work on Jim Cramer's Mad Money. We contribute a lot of technical analysis and market research to the show, and he features it maybe around once a month. And I do write a couple of newsletters for DeCarley Trading brokerage clients, which cover all the markets, including very specific option trading recommendations, some option selling, some option buying, sometimes spreads. Every once in a while we will trade futures outright. So for those of you coming from Kevin's side of the world, we probably, our website material newsletters will probably just expose you to something, a few different ideas. So again, I think it's good that we're meshing both of our groups here. I've written 4 books, and like Kevin says, you don't do it for the money, you do it for the love, but it is what it is. The newest book is Higher Probability Commodity Trading. It's something we're really proud of. We put a lot of work into it. It came out in July. We're really excited. It basically covers everything that I've learned throughout my career. I've been doing this for about 12 years. Does that mean I'm an expert in everything? Not necessarily, but it does mean that I know enough to write 4 books on the subject. And I've seen just about everything you could possibly imagine. So Kevin already provided the disclosure, but just to make sure everyone's on the same page, there is a substantial risk of loss in trading futures and options. It's not suitable for everybody. It's not investing. We're not earning interest or dividends. It's pure speculation. Okay, so let's get started. So again, we're going to basically take a step back and look at the big picture, why system trading might be a good idea, what can go wrong with system trading, the idea of trading a trading system. Now, Kevin brought up a good point about diversification, where you trade multiple systems at a time so that overall the diversification is working in your favor and you're not seeing the big drawdowns. And I think that's a fabulous idea. And unfortunately, not everybody has enough money to trade multiple systems, because it does take a decent size account to do that sort of thing. And so what our idea is, maybe, and trust me, no matter what your trading system is, no matter how much you back tested or how much research you've done, it's going to have drawdowns and it's going to have big drawdowns. That's just how system trading is. Well, it's how all types of trading is. The markets are conducive for certain strategies for periods of time, and then they shift, and then it's a cycle. So diversification is awesome. Another idea is to maybe trade the system. Okay, so why trade a system? Automated trading systems are not perfect, but nothing in trading is. If you've been following us for a while, you know that we are advocates of option selling, and option selling, like systems, it's the kind of thing where when it works, it just seems like easy money and everything is great, but when it doesn't work, it's a nightmare. I bet I could say that of any trading strategy. They're all the same. Unfortunately, we never know when the markets are going to shift and when a trading strategy is going to go from being good to bad. But the idea of system trading is, for those with emotional personalities or those that don't have a lot of time, system trading might be a good idea because they're a little more hands-off. So let's look at some specifics on why. Systems eliminate emotion. Most successful traders are the victims of fear and greed. Their performance often has little to do with their strategy, and I can attest to this. I've seen 2 people trade the exact same strategy or the exact same signals. For example, they'll both subscribe to a particular newsletter that has the same trading recommendations. One will make money and one will lose. And obviously it has nothing to do with the strategy. It just has to do with the way that that trader is reacting to the drawdowns and the upswings and how they're handling everything emotionally. You might wonder, well, how could two people have different performances with the same signals? Well, the truth is one of them probably got out, for example, panicked and liquidated a trade that went bad before they should have, or one of them got out too early, or whatever the case is, they let emotions change the way that that strategy was running in their account, and it worked for one and not the other. It happens all the time. I'm a big believer in the fact that honestly most strategies are probably pretty good in nature. Like Kevin mentioned, usually if you keep it simple, it's a better idea than making things really complex. The more complicated you get, the more chance there is for something to go wrong. And again, I think it really just boils down to emotion. And to be honest, the difference between making money and losing money is really making sure that you are a player and not a prayer. And it's really that simple. System traders do save some time. They can comfortably carry on a normal life, as opposed to, I talk to a lot of people that they want to day trade and they're constantly sitting in front of the computer and they feel like they can't even get up to go get coffee. Well, that's no way to live. That's how I live, but that's because I'm a broker. That's what I do. But if I were trying to trade on the side, or even if you're good enough to trade for a living, I probably wouldn't want something that glues me to the computer all day long. That said, if you do implement a system trade, or a trading method, it is going to need some babysitting. Things do go wrong. Orders can be rejected. I remember the days when trading platforms rejected and accepted orders based on human interference. So, for example, if you placed a trade, there was actually a human at your brokerage firm that would say yes or no. And during those times, believe it or not, things were actually a little smoother. They weren't quicker, it was slower, but at least you didn't have erroneous rejections. Sometimes platforms will reject a trader that is missing 1 penny in margin. Maybe they need $4,000 in their account and they have $3,999.99. So things like that do happen. Or maybe the system miscalculates margin because there's a blow up in a bid-ask spread, because there's some sort of announcement, a crude oil announcement, or you just never know. It could be one of many things, but things do go wrong. For that reason, it's really a good idea to talk to your broker about getting mobile access to your trading account. So we offer this at the Carley. Even if a client's running a trading strategy, let's say through multi-charts or something similar, they can pull up their account on their iBroker app, and they can follow the orders and the trades and all those types of things. So if they do see something that looked wrong, they see it on their phone, they can give us a call and we can fix it immediately. And ideally, you'd like to have a platform that would be capable of emailing and texting rejected orders to you. Some of our platforms are capable of that. Again, you want to make sure you're staying in the loop. It's not completely automated like some people assume that it is. On a side note, in regards to trading platforms, as a brokerage firm, we clear through about, I want to say 7 or 8 different FCMs. We have 30 plus trading platforms. Now, although we offer 30-something trading platforms, obviously not every platform is ideal for each trader, but we can accommodate just about anything or anyone depending on what exactly you're looking to do. So if you have questions, obviously we can point you in the right direction. System traders also enjoy convenience. They let the computer do the work for them. Aside from what we just talked about, making sure everything is running properly, they're basically running the account on autopilot. But of course, in addition to kind of monitoring throughout the day, every once in a while you want to check your statements, make sure everything's going as planned. You never want to just shut your computer off or even let it run, whatever your platform requires, and walk away and not think about it. Okay, system trading obviously can go wrong just like any other strategy, and let's talk about a few of those things that might run traders into trouble. Automatic trading systems lack common sense. Now, I guess you could argue that if you were a good enough programmer and you were smart enough, you could probably program anything into an algo. So I guess that's true. But in general, algo trading is pretty systematic. They're driven by technical analysis. There's not any human discretion involved, or at least there probably shouldn't be if you're running them right. But sometimes, well, I shouldn't say sometimes, they habitually will generate signals that could be considered low probability trades. For example, a system might sell an all-time low in the market, or it might buy an all-time high. And a lot of people will argue, well, just because it's high doesn't mean it can't go higher. And a lot of times it does. But the reality is, if you're buying an all-time high, there's probably a lot more risk on the downside than there is reward on the upside. As Kevin pointed out, the benefits of backtesting are very limited. It gives developers information on what's already happened, but it doesn't tell them what's going to happen in real time or at any point in the future, and that's just absolutely the case with any trading strategy. I've met with traders and people that spend years developing their trading strategy, and not necessarily automated, but a general idea of the market. And guess what? It works for those 2 years, but as soon as they go live, it stops working. And again, that's because markets shift. They go from low volatility to high volatility, and if you're not shifting with the markets, you're going to be in trouble. Unfortunately, it's a lot easier said than done. Nobody gives us advance notice. Markets are dynamic. They're not static. They are constantly changing. This is the one thing that gets me. I personally am not somebody that practices automated trading, and I think this is probably why my opinions are too strong, and I'm not saying that's a good thing, maybe it's a bad thing, but running an automated system would actually cause me more stress than doing something discretionary, and the reason being, I would not be able to sleep at night if my system wanted to go along the S&P when in my heart I felt like the S&P really had very little room to run on the upside. So for someone like me, this would be more stressful. And the whole point of system trading is to reduce stress, not inflict it. So I've been around this industry for a long time. I've seen good trading systems, I've seen bad trading systems, but I've never seen a system that works all the time in all market conditions, and I would assume Kevin would probably say the same thing. With that said, I think, for those of you that are not capable or in the place to trade a diversified portfolio of trading systems, as Kevin mentioned, you may want to consider doing something a little different, maybe trading a system that is in the dumps. And that sounds crazy, right? Because everybody feels like they want to chase performance. They only want to put their money into a system that's doing really well. But if you can find a system that has a long-term track record, or you can develop one, whatever the case is, and you notice that it's had some nice runs in the past, but right now we're in a little bit of a valley, maybe that's the time to put your money to work there, as opposed to chasing performance. In my view, the way that systems run up and down in cycles, just like markets do. Just like I would have a hard time buying crude oil at $150 a barrel, I would have a hard time buying into a system or putting money into a system that's had a huge run up. So maybe think of it counterintuitively and, looking to basically buy the dips and sell the rips in the system. And this is just a very simple idea. Beware of snake oil salesmen. I couldn't come up with a better term, but I'm sure there is. But the idea is just be aware that in the trading industry, whether you're talking about algo trading systems, actually particularly in algo trading systems, for whatever reason, there tends to be a lot of maybe dishonest isn't the right word, misleading claims on performance. And it could be somebody that's selling a system, selling a seminar, selling something to you. And this is one of the reasons we were excited to do this class with Kevin today, is we know that he's extremely forthcoming with the risks and the rewards and how it works. There's no shortcuts. If somebody is advertising a crazy, exciting profit, then it's too good to be true. And it really is. Don't waste your money. Don't go through the heartache. I actually have, over the years, I've had countless numbers of people call me, and, interested in possibly opening an account, and then they start asking, what kind of returns can we expect? And I try to explain to them that you really can't expect returns. It's trading. And I give them the spiel, the reality of it all, and then they hang up because they tell me, well, the last broker they called guaranteed that they would double their account in 3 months. Well, unfortunately for them, I'm sure that their broker made them broker. So just be aware. Don't believe everything you hear. And even if you see a nice, beautiful ad with nice graphics, that doesn't necessarily mean the data in it is true. Believe it or not, there are certain members of this industry that are required to be required to be registered with regulators and therefore have to follow rules, but not everybody falls within that parameter. There are some people out there selling trading products that are not registered with the regulatory bodies, and unfortunately they intentionally mislead the public. So be careful. And I'm not saying all of them. Obviously there's lots of great people out there with great ideas, but all I'm saying is just keep your eyes open. It's too good to be true. It is. I want to thank everybody for coming out today. It's been a pleasure. And just as a reminder, if you are interested in learning something a little bit different on futures options, selling options, that sort of thing, we cover it in my new book. And don't forget about Kevin's book, Building Winning Algorithmic Trading Systems. It's a good one. If you have any questions, give me a call or send me an email.
Thanks, Carley. You said some great things there. I like the the broker making you broker.
Right. Right.
And it's interesting you talked about snake oil salesmen, because it seems like the CFTC, which is the Commodity Futures and Trading Commission, has clamped down on some of these guys lately. Because I think it was about a week or two ago, I heard about one. This guy was selling a system for, it was like about $5,000 or so, and it was basically like an automated system. And when it came down to it, he admitted to investigators that, one, he never traded it, and two, he knew that people who would trade it would lose money. I mean, but yet he was saying how great it was. And
wow.
Yeah, I mean,
It's incredible.
I always tell everybody that if it sounds too good to be true, it is. And
absolutely.
Yeah, it's just amazing.
And the thing that I've come to conclude also, like if somebody's selling a system to you and they're trying, they want 10, 20 grand for it or whatever, that they probably, like if it was really a money-making system, they probably wouldn't be selling it. Honestly, there's more money in the markets to be made than there is in selling. So you just have to be careful. It's, again, not everybody. Obviously, there's some gems out there, but just be careful.
Yep. Yeah, and along those lines, I mean, people ask me that they say, well, hey, how come you just don't do that, and you still do teaching and stuff? And for me personally, I mean, I do full-time trade, but it's also nice to do something that's trading related that isn't necessarily all tied up in systems.
Sure.
Because like you said, they do go through drawdowns and that kind of thing. And
it's diversification, obviously. I mean, so no, you're doing it the right way. Absolutely.
Yeah. So
and you are really trading them, which is more than what a lot of them do. So I mean.
Yeah, that's a big thing.
Yeah.
So we have some questions, and if anyone has questions, just type them in, and we'll get to them. I guess I'll just start going through them, and we can both answer them.
Okay.
Diane's asking, can you do automated trading at Carley's brokerage?
Yeah, absolutely. Like I mentioned before, we offer like 30 different trading platforms. Not all of them are ideal for system trading. Kevin mentioned multi-charts is a good choice. Our free platform, the Xania 360, also is capable of easy language programming. So yes, the answer is yes.
Okay, and then she followed up with any other brokers out there that you can use with easy language, and the answer is yes. There are at least a couple brokers that actually you can use TradeStation with besides TradeStation, and then there's the multi-charts. So there are other options out there. The only thing, just from experience, that I can tell people is whatever platform you choose, platform in like data combination, just make sure if that's what you're testing, that's also how you trade live. So for example, don't test in TradeStation with their data and then expect to get the same results going live with multi-charts with data from CQG or somebody else, because there's going to be differences, and sometimes that can turn a good system into a bad system, and most people don't realize that. Paul Octopus, I'm assuming that's not his real last name, but I figured I'd say it anyways. He had a question for me. Do I use adjusted futures data for back testing or custom adjusted like the ones provided by TradeStation? So in all my testing, I use what's called a continuous back-adjusted, so a continuous back-adjusted continuous contract. And the reason you use those is because you have to stitch together all these different expirations because futures have a limited life. And if you don't adjust for differences as the next contract becomes the main contract, you're going to have these artificial gaps, and you can't really test with those. But the continuous back-adjusted contracts eliminate those gaps, which is nice, but they also have the drawback of sometimes the prices can be way off of what the current price is. So for example, like soybeans, if you go far back enough, soybeans will actually show negative prices with back-adjusted contracts. And obviously, you know, they weren't paying you to take soybeans back then, but if you test with like percentage calculations, the back-adjusted contracts will mess you up, so that's something to watch out for. Okay, let's see, just kind of going through. Look, Al, who left, was asking how much commissions are. I don't know if you want to address that in general, Carley, or how you want to do that.
I mean, our commissions are based on basically trading account size, volume, risk, that sort of thing. I mean, just as a ballpark, I can give people ideas. Like, to be 100% honest, we are not the cheapest brokerage out there. If you're looking for super, you know, basement level, we probably aren't going to be able to compete with that. But our rates are reasonable. We're very reasonable, and the reason we can't necessarily compete with the discount brokers is our services are just a little bit different. We spend a little more money on just making sure that everything's running smoothly for everybody. I'm answering the phone 16 hours a day personally. I mean, so we just put a lot into it. We provide research newsletters, trading recommendations, all those types of things. So for a small increment in additional commission, I think we give people a good value. If you want some specifics, if you give me an idea of what type of trader you are, you can email me and I can give you a specific quote. But most of our online traders are paying anywhere from like $5 to $7 round turn. Some of them go quite a little cheaper than that for futures trading if they're, you know, if they're doing straight futures. It just depends. But we try to keep it as fair as possible. We want everybody to be happy.
And I can attest, sometimes you get what you pay for with some of those the real deep discount people. And I know if you went with Carley, I mean, I have emailed her Sunday morning, early morning, my time, and I'm in Cleveland, and she's in Las Vegas, and I still get an answer right away. It's like sometimes I'm like, oh, I didn't mean to bug you on a Sunday, but I just wanted to send it. I figured you'd get to it Monday morning kind of thing. So she's really good about the service. So.
No, and that's what we strive for, is just to make sure that everyone's taken care of. Just another quick note on that also is you mentioned you do get what you pay for, and that's absolutely true. Like, I know if you start going to some of the discount brokers, they'll try telling you which contract months you can trade. I know some of them charge overnight fees, so if you hold a position overnight, they'll charge you an extra fee for that. So there's all these like hidden charges, or if your platform goes down and you do need to call in an order or you need help, they'll charge you $50 for that. You know, so are they cheaper? Yes, in some ways, but in the overall scheme of things, you know, you probably end up paying for it anyway on the back end.
Okay, looks like we got a bunch more questions, so hopefully we'll get to them all, but I'll just quickly go through a few of them. Hugh's asking, do I trade mean reversion breakouts or trends? The answer, Hugh, is all of them. I mean, I'll try anything as long as it tests well and works. Stan's asking about the best programming language. I use TradeStation Easy language, which also works with multi-charts, and as Carley said, works with Zener 360. It really comes down to what you're doing. You know, if you want to do a scalping strategy, don't use any of that. You know, you probably want to come up with almost a custom platform. So some of this depends on what you want to do. Somebody else had asked, do I program in C? I don't. I know like NinjaTrader is more like a C-based language. You know, there's a lot of alternatives out there, and I don't want to say one's head and shoulders better than the other. They all have their good points and bad points is kind of the way I look at it. Scott's mentioning, he says, great tips from Carley, and then he's asking about some of my algos about leasing them or where you can see them. I have a limited number that I offer through Striker.com, so if you're interested in that, you can go there. Let's see, Jim is asking for Carley, besides your book, what other books on options do you like?
Okay, that's a good question. Just one thing quick, because you mentioned Striker, just as an FYI. you could, if you wanted to lease and trade Kevin's system through Striker, you could actually use us as the broker. So as far as option books go, the first book I wrote was Commodity Options. You probably saw that on the slide. And then the latest one, Higher Probability Commodity Trading, is also options intensive. Those are two great books because they focus specifically on options on futures. And to be honest, I don't know of any other book, and I could be just overlooking it, that really focuses on options on futures. There's a lot of books out there for stock traders, stock option traders, but not commodity option traders. I mean, a lot of the commodity books will have like a chapter with here's a call and here's a put, but very few of them actually get into commodity option trading. So off the top of my head, I don't know of another option trading book that I could really feel comfortable recommending, to be honest.
Okay. Martin's asking about system expectancy and drawdown that I consider good enough. I probably can't give a full answer here, but I basically look for a profit to drawdown ratio, and I do it a specific way, but basically 2 to 1. So meaning, in rough terms, if you wanted only a 10% drawdown, you could aim for a 20% annual return. So obviously, you know, when you start thinking about, hey, I want a 100% return, well, what does it mean? It means you're getting really high in those potential drawdowns, you know, and expect maybe 200% a year. You're going to be taking some healthy risks a lot of times and big drawdowns. So that's what you got to be careful about, and that's what a lot of people don't really tell you with, you know, that there's that downside. Cody and Scott are both asking sort of the same question. Cody's asking about Trade Navigator, and Scott's asking about Thinkorswim. I've never personally used either one, so I don't know if it can do everything you need. I do know people have used Trade Navigator a little bit more for back testing, and I think the issue there might be just the way Trade Navigator does some of their things is a little bit different. But you know, the big thing with both of those platforms, you want to be able to program all your ideas and obviously, you know, get all the data you need. You want to be able to do some optimization, and if you follow the way I do things, you want to do walk forward testing. So if you can do those things, you probably will, that's almost all the battle. Okay, so let's see. See a lot of questions here. Chris is asking how long it takes to learn easy language. For somebody who's used to programming at all, even a little bit, it's probably pretty easy. I mean, you know, you saw the code that I gave where it said if close is greater than the close X bars ago, buy. That's pretty much easy language, so it's pretty easy. Let's see. Okay, Thomas is asking about strategy diversification. Should it include different time frames? Yeah, I think the more you do different things, you have an ES system based on daily bars, an ES system based on 60-minute bars. You know, the more you add in all these different approaches, I think the better off you're going to be. The key with all that, when you're trading multiple systems, is to actually be uncorrelated with the results, and there's ways you can check that, but that's the key. You don't want to trade very correlated systems, and unfortunately there are some times where even if the past wasn't correlated, things can become correlated. I'm sure, Carley, you've seen traders when they blow up that are trading multiple, let's say, options techniques or something, everything goes wrong at once against them.
Yeah, especially with option selling, that tends to happen. People will be short, you know, puts in crude oil, and then also short puts in the grain and short puts in the S&P, not thinking that, you know, when things go bad, everything trades as one, and so they just don't realize that, you know, like in 2008 or something severe like that, you get all the markets selling off at the same time, and then you end up getting in trouble. So absolutely.
Okay, Bill has a question for Carley. Could you please repeat your book title, which emphasizes and concentrates on options?
Yes, the the first book that I ever written it's called Commodity Options. That's the title of it, Commodity Options. It's a little outdated as far as, like, it'll still talk about the trading pits, but most of it is just trading strategies, butterflies, credit spreads, that sort of stuff, and all of that is timeless. So that's a great one. And then the other one was Higher Probability Commodity Trading, which it covers just about everything you can think about regarding the commodity markets, but I'd say probably around 50% of it is kind of aimed towards option traders.
Okay, I think we have time for a couple more, and then we'll let everybody go. I don't want to go too far over. But if I don't get to your question, or Carley doesn't get to it, we're going to share the questions afterwards and make sure, as long as we can figure out who you are, which usually we can, we'll send you an email and we'll still answer your questions, because I don't want to leave you hanging just if we don't answer it here. But Cody's asking a couple questions about indicators when developing a strategy, and then also about optimization and some of the perils of it. So I can tell you, as far as developing systems, I will consider any kind of indicator, any kind of chart pattern, pretty much anything, as long as it works. I try to take an open mind that there is no bad idea out there. Think about the simplest systems, a moving average crossover. Could that work? Well, you test it and you see, and maybe it can work. And probably a lot of markets it won't work, but maybe you'll find a few markets where it will work. The optimization part, it's a problem because a lot of people think that if they hone in on the sweet spot of a strategy, by taking a stop loss and going every $5 and oh, hey, from $510 to $545 is stable, so therefore I'll use that. That's an example of probably misusing optimization. The big key, you don't want to run millions of iterations of runs and figure out what the best set of parameters is. You want to do maybe 100 or 200, or I do sometimes thousands of iterations, but I don't do millions. I don't run a system all weekend to figure out the best combination. So it's kind of a trade-off, but the less you do, the better, basically, is what it comes down to. Why don't we take one last question, and I'm trying to find one for Carley here. And I don't know if you can answer this, Carley, or maybe I should. It's from O. Hansen, is asking about data quality from different providers, and maybe you can expand that to just talk about some of the different platforms that you have. Is there a big quality difference that you see, or anything along those lines?
I mean, it really, honestly, it kind of depends on what exactly you're doing. For most traders that are position trading, honestly, it's, maybe it's different for system traders, I'm not sure. But for discretionary traders that are position trading, really the data is not substantially different from one platform to the next, that it's going to, change the outcome of your trade. So, for example, I get people that are always like, they see advertisements for platforms that have, the low latency, and they give you all these crazy fractions of a second, and that's how fast it goes. But to be honest, your finger, you can probably, whether you press the button fast or not is really not going to make a difference in your trade. I'm not convinced that that's a big deal. System traders might be a different story, but I would say, generally speaking, the data on most platforms is going to be about the same. What you really want to worry about is platform outages and support behind the platform. I mean, you could have the fastest platform in the world, but if, God forbid something ever happens, it might only be once a year or twice a year, but if something happens and you can't log in, or it freezes, and you need help and you can't get a hold of someone, then it really, that's what makes the difference in my eyes. That's my opinion. So.
Yeah, those are some good points. Okay, so I think we'll wrap it up for those questions that weren't answered, and there were some pretty specific questions that I tried to just gloss over, but one of us will address those, so just rest assured we're going to answer your questions, because we appreciate everybody coming out and listening to us babble on. Well, I was babbling. Carley was giving good stuff the whole time. So, but thanks, Carley, and thanks everybody attending. And who do you want people to root for today, Carley? Should it be the Cubs or the Indians? I think it should be the Indians.
I think it should be the Cubs. It's only fair, right? 1-1.
Yeah. Either way, it's going to be a good World Series.
It will. So. It will be.
So thanks, everyone, and I guess we'll hope to hear from some of you soon.